Let's move next on to another company that's doing some interesting work. This is Oceana. Right, so this is a Cape-based company. It's been around since 1918. It's the largest player in the South African fish industry. So that's interesting. In the past, other companies like Sea Harvest and Irvin & Johnson were big players, but Oceana has really put its hand up and emerged as the major player here locally in South Africa, both with regard to the deep sea fishing as well as the stuff that gets hauled out closer onshore. It's got the largest allocation in terms of the allowable catch. It's a player in Namibia as well, and it's involved with branded fish products, and that's the canned pilchards that you'd be familiar with and those various brands. Market cap of 11 billion rand. But here's the interesting thing. It has just made a play to buy a company in America based in the southern Gulf Coast, whose name is Daybrook Fisheries, which is a significant player. They're going to be paying somewhere in the region of 4.5 billion rand for it. And that is a company that manufactures fish oils for various products and applications. Gerbrand will tell us what those are in a minute. But that's interesting, isn't it? A company that's located here, it's about as big as it can be here. It decides it wants to wander off to the United States of America to go buying businesses. I wonder if that is a good idea. We shall see. 17.28 price to earnings ratio, dividend 4.06. What do you think of the transaction in the US, Gerbrand?
Well, look, they had to go somewhere because I think growth is in South Africa in the fishery business. They probably ex-growth, and we know that they purchased so one of Food Corp's little chunks of
Food Corp as part of the reorganization was obliged to push it out.
And that took about a year or two through Competition Commission. So certainly they had to go and look elsewhere. They are the majority market shareholder in most of the fisheries. Their revenue from fisheries locally is, I think, 60% on the canned fish, etc., 20% on horse mackerel, 10% on lobster, and they've got like 10% on storage and cold storage and so forth facilities as well, where revenue plays a role. But I think they had to do something. They, over a 20-year period, these guys have certainly delivered, I think, 24%, including dividends per year to shareholders. Which is not many companies on the JSE can do that. It's not cheap at the moment. It's a 17p. It's at earnings of about 2 rand. So that P is going to probably go to 22 rand a share going forward. There's going to be a rights issue. The major shareholders, which is Tiger Brands, Brimstone, etc., are already subscribed to that.
Okay, and that's to fund the new deal, right?
Yeah, certainly. But I think on the new deal, it gives them about 35% market share of that specific industry.
So they'll be a big player in the fish oil manufacturing business.
It goes into the omega-3 products, etc.
So these are the capsules.
A lot of people call this the oil or the gold, the fishery game. And they certainly know their game. So I think they've done their homework, certainly. You certainly need some market share dominance if you want to go and do some kind of fishery business. And they certainly know their business.
Look, it's a long way from here to the port side of Louisiana to be involved with a business there. But Francois Kittel, who's the CEO of this business, was a very experienced guy, came up through the Irvin & Johnson business inside of AVI. He's done a great job here. You got to think that if anyone's going to pull it off, they will. The question, I guess, remains is whether they'll do a good job of managing it at a distance, what kind of people they'll put there, whether they get lucky in terms of the timing of the deal.
Yeah, and then the currency comes into play as well, which might be a problem going forward long-term.
What about the shareholder base? Because 40% owned by Tiger Brands, that's interesting, but I suppose Tiger can't go any higher without triggering an offer to minorities. So maybe the fact that Tiger is a potential buyer of the whole business at some point, do you think?
Yeah, no, I don't think so. I don't think that's their core business anymore. They've actually unbundled these things a long time ago with the Adcock shares and with the Spars shares. Maybe they should have kept all those. They've done much better than the Tiger Brand shares. But
look at the share price there. You can see it's looking pretty toasty. So it's what I referred to earlier, very good run. And we have actually owned them in our hot stocks portfolio during that period of 2012, 2013 on a couple of occasions. They didn't do much. Then they flew up again in 2015. So what do we think about it now? Are you hot on it?
Yeah, I think short-term wise or year outlook, I'm not hot on it, but I think long-term wise, these guys certainly know what they're doing and it's quality, and they've proved it in return on equities and return on assets, etc. So maybe we get some opportunity along the line in the next 6 months to actually start purchasing these.
Okay, so you're not hot with regard to pricing. I think I'm going to give them the benefit of the doubt and go with hot. I like people who are brave and go out there, and it does seem, as you say, as though this business they're acquiring is in a good position.